It's decision day. Investors are split over the size of easing.
It is the most important day of the year.
You have lower interest rates, which the Fed is going to deliver.
There's a really good chance that they move 50.
Today is a historic day in the financial world. First time in the 4 years, the Federal Reserve is cutting interest rates, making the end of its aggressive inflation fighting campaign. Maybe you are asking, why is this relevant for you? The Fed's decision today will impact not only borrowing cost, the stock market, but with high probability also your mortgage rates. Before today's Fed meeting, there was priced in 1.6 rate cuts in the market, what means that there was around 60% chance that Fed will not cut the interest rates only by 25 basis points, but actually by 50. You know, last time when we were at the peak with the interest rates and the Fed started with the cutting the rates down, we started with 0.25%, what is 25 basis points, and then finished with 50 and 100 basis points cuts. But of course that was a little bit different story because that was a COVID time. So this time the interest rate cuts might not only be slower, but also we might not go straight towards the zero, but we might actually easily oscillate around 2 to 3% for a longer period of time. Okay, so as I mentioned already, the last time we started with the cutting rates, we started with 0.25. This time it's different story. This time the Fed started with the cutting rates by 0.5%, what means 50 basis points. What is basically quite rare in the modern finance history, because since 2000 there were only like 4 cuts by 50 basis points, 2 by 75 and 1 by 100 points. And all of those were of course during the hard times, during the dot-com bubble, financial crisis in 2008 and also of course the COVID time. So at this moment it's really strange that we started with the 50 basis point cut straight from the beginning, because we did not even hit the Fed stated inflation goal of 2%, we are still quite high above, around the 2.5% of the CPI, and the core inflation is even higher. But maybe Fed is just trying to act proactively this time, because with the inflation it waited for too long to increase rates for the first time, and then we all know what happened. So this time Fed maybe decided to act a little bit earlier, but then to have more control in their hands. So we will see. Of course, we can take a look on this situation from 2 points of views. First is the stock market, where basically the borrowing of the money became cheaper. That means that the companies can borrow more money for lower interest rates, they can invest more, maybe create more job opportunities, and basically grow even faster. What means of course that the stock market could go higher, right? But on the other hand, as we started already with the 50 basis point cut, that might signal that something is really not great in the economy and that soft landing might not actually be real. So that would of course mean that we could expect the hard times on the macro level, what means more negative messages from the job market, CPI reports or anything else, what could actually bring the stock market down. So we will see where we will go in the end. Also during this Fed meeting we received the new dot chart, where we can find the levels at which Fed expecting to have the interest rates in the following years. So as we can see the median of those yellow dots at the dot chart, the Fed is expecting interest rates to be around the 4.4% at the end of 2024, and at the end of 2025 the median is on 3.38%. And then of course at the end of 2026, the Fed is expecting that the interest rates could be around the level of 2.88. And as we can see in comparison with the historical gray points, we can see the movement to the down. That means that Fed expecting higher pace of interest rates cuts than in the June of this year. But of course it's not all set up. As we could see, there is already change in the expected interest rate from the June to September. That means in case any kind of macro data, good or bad, will come and Fed is saying that they are data dependent, they will go through all the data that they will have and they will decide whether the interest rates will be decreased in the faster pace or actually maybe stayed at a certain level for a longer period of time. Okay, so we know already that the Fed decreased the interest rates by 50 basis points, and we saw the dot plot of projection where the Fed is expecting to interest rates be at the end of the following years. And now let's briefly take a look on markets, how they reacted on this Fed meeting and on the Powell speech. So first of all, on the SP 500, as we can see, as soon as we received the 50 basis points rate cut information, we went up on the SP 500 by almost 1%. But then, as soon as at the 2030 Powell's press conference started, we went back down towards the level where we started. So at the start we went up by 1%, and then we went back down by almost 0.5%. And now, as you can see, the rest of this session looks quite in a positive way. When we will take a look on the gold, there it's quite interesting story, because as soon as we received new information, we went up by almost 1.3%. And as you can see, if this information is right, for only 1 pip, we reached the level above the 2,600 on the gold. But then, of course, as you can see, we went straight down, and now we are down around the 1.4%. So this was the gold. Once again, we went to the top, and then after the Powell's press conference, we went below the levels where we started. And lastly, let's take a look on the Euro USD, and here we can see that once again the dollar firstly became weaker towards the euro. We went almost towards the level of 1.12, but then we went back towards the level almost where we started. So on all of those markets, almost the same story. Okay, so I guess that's all for this video. Let me know in the comment section, what do you think, where we will end the year, at what level of the interest rates? And of course, in case you want more videos like this, that means finance, world, investing and many more, don't forget to subscribe. So that's really all for today. Thanks for watching, have a nice day, and see you all at the next video. Goodbye.